Welcome to the sixth video of ICT application. And this time around, we'll be looking at the banking system for students who wishes to work in the bank, who wishes to do anything banking client, and you having that stigma. Am I really suited? I don't like ICT. I don't have a flair for ICT. Well, oops, jokes on you, because you are going to be using a lot of ICT tools to work in the bank. Okay, so let's get right to it. Okay, so we'll be looking at the banking system now. We have come to realize that the word ICT, from all the videos, we realize that it is changing every field, and the banking system is not left out from this wonderful application that ICT have come into the system, and it's come to stay. It's even getting better and better and better and better and better. Okay, so today we'll be looking at in the banking applications, what has ICT helped in the banking application, and one of them is the use of what automatic or automated rather teller machine. Two, electronic funds transfers and credit debit card transactions, check clearing, and internet banking. And we'll be looking at it one by one. Are you ready? Let's go. Okay. So we'll be looking at the automatic teller machine. Okay. And in the automatic teller machine, the first thing we need to understand is that the ATM, which is your cash machine, can be used for various purposes. Okay, and this includes your cash withdrawals, cash deposits, checking of statements, and actually printing of statement. Right now, in the ATM, it allows customers to carry out these things, and not just that, you can also deposit checks, you can see a mini bank statement, you can pay bills. And what are the bills you have to pay? Electricity, your other bills, right? Subscription bills and the likes of that. Okay, you can do a money transfer, transferring your money to another account, as the case may be. Okay, now showing a typical ATM process. This is a typical right here. A typical ATM process. How does it go about? Okay, the first thing is the customer place in the card into here, right here. Okay, and once placing the card, it shows the name of how that is done. Okay, it shows the name of how that is done. It shows the name of the card owner. Okay, once it shows the name of the card owner, the next thing it does is it takes you to where you can put your PIN, and that PIN means personal identification number, right? It is compared with the PIN stored in the chip, right? And if the PIN is the same, of course, you know what happens. Then it gives you clearance. So this is what happens right here when you are withdrawing, and what goes behind it. Okay, when the PIN is entered, the PIN is checked to see if it's correct. If it's not correct, you have to retype. Okay, the card is checked also to see if the card has an expiry, to check the duration of the card, if it's exceeded or not, or to check also if the card has been stolen. Okay, if the card is stolen, or if the PIN attempt exceeds 3 times, then that card is restrained and your transaction is automatically closed. But if that does not happen and you've been able to overcome that hurdle, right, then a number of options are displayed for you right here, and you can see the options that are being displayed for you right here. Okay, and once you pick withdrawing, okay, which is cash, then you can select the number of amounts you want to withdraw, and of course, the customer will accept one of the cash options or types in different amounts, like we've said. Now, the customer account is checked to see if that customer has a sufficient amount of what he or she wants to withdraw. And the check is then made to see if the daily cash limit has not been exceeded. There are some cards there are some accounts that are different tiers. So if your account is tier 1, you might not be able to withdraw maybe 100,000 in a day, and that restricts you, because that is what you can withdraw for that day. Okay, if it's not exceeded and all checks are okay, then that transaction is then authorized. Okay, and then the cash is then counted out by the machine. You start hearing the sound, right? And then the customer is asked, do you want a receipt? No, you have your cash. Or whether you want the receipt or not, you still have your cash. Do you want to perform that transaction? And yes or no, and then if you say no, that means you are done for the day and the card is slotted out for you, and then you can go. Okay, and then your account balance will now be updated. Okay, that is just what happens. Okay, on that, it's just a simple process on what it happens right then. So what are the advantages of using ATM cards? What are the benefits of using the ATM machine? Right, it is possible to withdraw cash at any time of the day. Okay, and they offer many banking services. Okay, that we have talked about, offer so many banking services without need of you going to the bank. So many, like your airtime, paying of bills, utilities, and likes of that. And you don't have to go to the bank for, right? You can just be in the comfort of your go to any of the branch nearest ATM, and you can do that without disturbing anybody right there in the bank. Okay, and that will actually avoid queuing. Okay, and it is possible to access that your account from anywhere in the world. If you open your account in Lagos and for some reason you're in Abuja, you don't have to come to Lagos to withdraw your money. Come on, that's like 15th century or something, and also, and that is that. Okay, but then again, it doesn't go without some disadvantages. Okay, and disadvantage here is it is used in places where theft can take place at night. It's lonely to go to the ATM at night, and I will highly recommend that you don't even go there, especially at night. You don't even go there. Please do not go there. Okay, there is potential for shoulders, soften and card cloning scams. Okay, people can actually snoop to see your pin, and your cards can also be cloned. Okay, some bank charge customers for using ATM. This is the reality of the truth, and that is the disadvantage. Okay, cash withdrawal limits are often imposed on customers. There are some cards that, yeah, they have limits, and you can't go beyond that, even though you have excess of money. Okay, if your debit card is faulty, if your card is faulty, you can't carry out any transaction. Okay, so now let's look at the other one: electronic funds transfer. Okay, the electronic fund transfer allows money to be transferred electronically from one fund to another. Okay, an example of the EFT is the employer pays his employee their salaries. Okay, so it's a system that allows money transfer to be sent directly to your to the bank computer um, system. Okay, so when an ETF receives instruction right here, the computer system automatically transfers a specific amount from one account to another. One common use of the ETF is the payment of salaries that we've talked about to the staff of the company. Okay, and on the day when the payment is made, the company informs the bank to transfer money from their account to the bank accounts of this word employee. So an instruction is being given from the employer side to the bank, and of course the amounts are credited um, accordingly. Another example of the EFT is when the credit or debit account is used to pay for a purchase in a store. Okay, the payment is made using a system called the electronic fund transfer at point of sales, which is called the EFT POS. So you need to understand, it's very, very important. This is key. So when a debit card is used, when you pay for a purchase in the store, like you go to the store, instead of paying cash, you put your card, that's electronic fund transfer. So the money is being transferred automatically without any form of exchange, automatically. Okay. So what is the advantage of the EFT? It is a secure payment method. Okay, a secure payment method. It is very quick payment method. Okay, it is less expensive Okay, for example, using check. So very quick, very secured, and customer has the right to dispute an ATM payment for up to 6 days. If there's any issue on the payment, you can make complaints about that. Okay, then we have disadvantages. Okay, and once an amount has been transferred from the bank, it cannot be reversed. Okay, customer needs to have funds immediately available in the account. Okay, unlike your check, it cannot guarantee the recipients. Okay, it cannot guarantee. That is, someone with a fake ID could collect your money, and we have to guide against that. The next one is the credit debit card transactions. Okay, now the first thing you realize is every debit or credit card has a chip. Okay, which I explained to you guys in class. Okay, and they have a magnetic stripe. Okay, now the chip contains key information such as the pin. Right, the pin is very, very important. That's what it contains, the pin. Now this system is designed to enhance security. Okay, and the security talks about, for example, you want to transfer money from the merchant bank to the customer bank. Okay, and you have issues, or you want to transfer, the process in which it goes. For example, now let me show you this. Okay, let me open the slide right here and actually paint a picture of what I'm explaining here right now. Okay, so let me show you this. Now, for example, we have this right here. Okay, processing your credit and debit card transaction. Now we have the QBN, right, which is Qatar National Bank. Okay, it's a bank in Qatar, right, and which is the customer's bank. And the merchant bank, which is the company's bank, which is RBS, which is the Royal Bank of Scotland. Okay, is a bank in Scotland. Wants to transfer money to the Qatar National Bank. Now, what happens is this. Okay, the funds are transferred. Okay, from the customer to the merchant. You're buying something. That's what the merchant is. When you buy, you're acquiring something. You want to buy something from the customer is in Qatar, and he has a bank which is the Qatar National Bank, and he wants to buy something from the Royal Bank of. He wants to buy something from someone in Scotland that is operating on the Royal Bank of Scotland. Now, what happens is this: the person transfers the funds from his or her bank, which is the Qatar National Bank, and there is a checking from his own bank to that bank. Now, if the funds are not transferred, this is what happens here, right? If there's a transaction decline, now the card holder is paying by card, and card will be placed in chips and pin reader. Okay, the pin will be entered to proceed with what transaction. Now, using details of the card over here, the merchant bank contacts the card holder's bank to check for sufficient funds to complete the transaction. Now, if the transaction is not completed and there's a decline, they call the bank to know what happened. This person paid with the card, but this card was not credited, and then we can be able to iron out to know why the Qatar National Bank, for some reason, after making the transfer, right, the funds were not transferred to the Royal Bank of Scotland. So that is just the process in which it goes through. Okay, so that's just what it means. So the system is designed to enhance security because it is better than relying only on what is signature, right? It's better than just enough signing. So paying for an item using a chip or a PIN card is a form of electronic fund transfer. You need to understand this. It's very, very important. Paying for item using your chip and PIN card, which is your credit or debit card, is a form of what electronic fund transfer, your EFT, right? Now, there are examples that are given in the textbook, and you can see going to restaurants with your cards to pay, what happens, and that. Okay, it's the same thing as if you're going to an ATM to do that. Okay. Now, we have the advantages and disadvantages of using a credit and a debit. Okay, for example, there's a customer protection if a company stops trading or goods do not arrive. There's that protection that is being given. Another advantage of the credit is international is accepted internationally or globally, worldwide. Is accepted worldwide. You can use it to pay for any thing online globally. Okay, the interest-free loan if money paid, right? Because what the bank will give you, you pay and the bank will credit it in that currency, okay, within agreed time period and less. You can buy items online using your credit card, okay, and the more loans you take and you pay on time, you get a good credit score, right? And although you can be charged with high rates and annual fees often apply, but it is easy to end up with credit damage, and that can actually mount up. Okay, if you don't pay on time and you're having some issues you have to deal with. Security risks when you're using your credit card online. There are risks with your card online. It can be hacked and the likes of that. Now let's look at debit card. And we said credit card is used globally, while your debit card is used on that particular country. You cannot use it to carry out transactions, foreign transactions, okay? And money comes from the customer's current account, okay? It's at your account. There is no interest charges to that, okay? It is safer than carrying cash. We have to admit, you can put in 1 million in your card and nobody will know if 1 million is there's 1 million in your account just by holding the card, okay? And you can buy items online and like that. Although there are disadvantages, and that's less customer protection than credit card if you do not arrive or the company goes out of business. Okay, no credit card allowed. That is, customer must have funds available. Security risk when using your debit card as well. So we're looking at checks, and checks are oldest way of paying someone for goods or services, okay? And it's a slow process, it's less secured of making payment. And we're looking at the advantage right away. It is more convenient and safer than cash, it's still better than cash, right? You can stop payment if necessary, and checks can be drawn anytime. You can just drop check anytime and to give to whoever wants to make that withdrawal. Checks can be post dated. You can write ahead for it to be paid, and checks can be traced if they are lost. If your checks are lost, they can be traced. They can be traced. Okay. Disadvantage is that they are not legal tender. Okay, and can be refused. Some bank can actually bounce your check back, and it's a slow method of payment because it takes usually 24 to 48 hours for your money to be credited. So it's not instant because there's a lot of process it has to go through. It is easier for fraudsters and than credit card or debit card payment method. Fraudsters can impersonate someone, kill the person on the way or whatever, and just take the check and pay, right? It's relatively expensive method. So this is a sample of how the credit card, your check is, and that's how it is. I showed you a practical example also for Naira, how the Naira check is, but this is how it is in a dollar check. Okay. Um, yeah, I think the next one is your internet banking, and that's the last one we'll be looking at before we go. The internet banking, and in the internet banking, we have so in the internet banking, right? In the internet banking, we have that's computers in retail, and we have the point of sales terminals. But before then, we have what we call the online banking, and the online banking can now access their banks. Customers can now access their bank accounts online on secure websites using these authentication techniques. Okay, some banks have also developed online banking applications. Okay, to allow customers to access their account via mobile phones and tablet. Okay, customers can use the online banking to check their balance, manage direct debits, transfer money internally and what externally. Okay, apply for loans as the case may be. Okay, and we also have the point of sales terminal. That is, in the point of sales terminal, we have the barcode that appears on most products sold in shops. Okay, they allow for quick identification of the product details once the barcode has been scanned by the barcode reader. So once that has been done by the barcode reader, supermarkets use the point of sales which incorporate a barcode reader to scan the barcode and retrieve the price of the article. It also relays information back to the computer system, allowing it to update its file. Now, the barcodes are made up of what? Alternating dark and light lines of varied thickness. Okay, a number of underneath the barcode usually consists of four parts. You can see there are four parts. There you see the country code is there, manufacturing code, the product code, and a check digit. Okay, the check digit is the form of validation, okay, which is used to ensure that no error occurs during the reading of the barcodes. Okay, now barcodes are used in automatic control of stock levels in supermarket to keep updated prices. Okay, and they are attached to all items sold in supermarket. Is associated with stock files and the case um maybe. Okay, we have the electronic fund transfer at point of sale, which I've also explained, talking about how you can use your pin, contactless card, and the likes of that. Now, we have the use of tokenization with mobile phones. Okay, so now tokenization is used when setting up what? A mobile wallet. You're setting up a mobile wallet. Okay, this allows the user takes a photograph of their credit card using the smartphone camera, and details of the card such as card number are sent by the smartphone manufacturers, whatever. Now the bank now replaces the details of the card with series of random generated numbers called your tokens. Now, what this happens is that they send back to the manufacturer your phone, your mobile phone manufacturers, and what happens is that the program will now run this sequence of numbers back to the smartphone. Okay, and the random number is then used for transactions, right? But the moment you perform a transaction, what we're simply saying, when you perform a transaction, you see a space where you put the digit. So it sends to the bank your card. It's quite simple. You put in your card details online to buy something. I mean, what happens is that the system captures it and sends it to the bank and performs without your number, without your 16-digit number, and performs a random number. That's what the system does. It generates a number from the 16 digit of your number in your card and gives you as your OTP, which you put, and then it now synchronizes that with your card. Okay, and of course many smartphones are also protected by touch IDs or face ID technology, which means that even if the smartphone is stolen, the thief still cannot use the smartphone to make payment because of the touch ID. Your Apple, if your Apple is touch ID and you need your touch ID to make any payment, then without your face, that cannot be paid. Internet shopping, we love it. Ladies love shopping on the internet. They shop a lot. Okay, so using the internet banking requires good online security because you want to put your cards on websites that are secure, and then there are some good websites that are also secure that allows the management of what bank account online, including what transfer of money between accounts, okay, payment of bills, ordering of statement, and so on. This is of a particular benefit to people who are unable to visit bank during their normal opening hours, or if they are traveling to the bank, or if traveling to the bank is difficult. So there are so many advantages of the internet banking and disadvantages too. But when it comes to online shopping, right, there are positive and negative effects. We have to look at it. Online shopping and banking means that more people can stay at home to buy goods and services. You can manage their bank account, book holidays, book flights, and just have the best of time with that. Now, what are the advantages? There is no need to travel into those towns, and that is reducing cost and time. The stress for you to actually go in that, okay, entering traffic and the likes of that. Users can now have access to worldwide market. You can be able to access five pages of the things you want to buy, get the full knowledge of how well the prices are, so that people don't actually cheat you. Okay, you can be able to access any shop or bank without need to leave home. Okay, and that's actually a very big benefit. Okay, it's online 24 hours. People are always making payment and the likes of that. Disadvantages there is there's a possibility of isolation and lack of socialization. We don't have to take that away. Possible health risks associated with online shopping or banking, lack of experience, okay, that you don't know how to go about it, okay. Security issues are a major concern in your system because connected to the internet, there could be viruses, there could be phishing, there could be spamming. You could go to websites that are not genuine. They look genuine, but they're not genuine, okay. Of course, for you to be able to have an internet shopping experience, you need to have a computer and you have to pay for internet to have that experience, okay. High street jobs and banks are closing because of the increase of online shopping and that, okay. Local independent retailers will lose out because they are not online and they will not be able to get um, the kind of customers they are looking for. Okay, so that's all for ICT application in banking systems. See you in the next video.